New year, new outlook for the Calgary market. Hey, welcome to another video. My friends call me Abou. If this is your first time here and you want to stay up to date on the Calgary and the area real estate market, or if you're looking just to simplify the buying or the selling process by using specific marketing strategies or negotiating techniques, make sure to follow and subscribe. Happy New Year, and I hope you're off to a great start. My monthly updates typically take a close look at how the market performed over the last month with an eye toward how we're setting up for the month ahead. But December is different because all Decembers tend to be substantially the same in Calgary's housing market. So we're going to flip the script this month and spend most of our time really looking forward, discussing how the broader economic trends affecting Calgary might play out in its real estate market throughout 2023. But first, let's have a quick look at December 2022 for old time's sake. December is always a month for the real estate market to really slow down, to gather itself, and to set itself up for the coming year. So there's some analysts write it off altogether. A sagging December market is so predictable that it doesn't tell us much that we can use to make smarter decisions, whether you're looking to invest, buy, or sell in real estate. So I prefer to look at each month on its own merits. So let's have a peek at the numbers. There hasn't been much stock or much inventory available on Calgary's market, and December didn't do anything to change that. We started the month with roughly around 3,100, and we ended up with a record low of around 2,200. Barely more than 1,000 homes hit the market for the first time. And sales declined as well to their yearly lows, just as we've come to expect from previous Decembers. But here's where the interesting stuff begins to come up, begins to emerge, and that's home sales around the Greater Calgary fell to just more than 1,200 in December, putting it on equal footing to 2020, to 2013, and 2007 as the second strongest December ever. Last year was the record setter, and it was an outlier for some reasons, for more reasons that I can count. So yes, December slumped just as we all expected it would, but it also continued a 3-year trend of relatively strong year-end sales, which really is going to shine a little light down the line into 2023. So as we look ahead, if December is always a sleepy month, January tends to leap out of bed without hitting the snooze button. The question isn't whether things will pick up as we head into 2023, it's what the bounce back is going to look like. So Calgary's real estate market follows its own yearly patterns, but those patterns are strongly affected by the bigger economic picture. A weak regional economy can dampen the traditional early year bounce back, but a good economy news can amplify it, and the news around Calgary and around Alberta as a whole is largely good. So if we were to look at the big picture, and as we step back from Calgary and look at the provincial economy, it is closely tied to international oil prices. We benefited when the cost of Western Canada Select oil and the related West Texas Intermediate benchmark rose through the first half of 2022, when oil prices fell back to around $80 a barrel. Now, some Albertans were wondering and began to wonder where they would firm up. While it looks like oil prices have found a good level of support and at higher prices than a year ago, the growing consensus among analysis is that global oil prices will remain strong throughout 2023, with Brent crude averaging nearly $90. WTI correlates strongly to Brent, and WCS trades at a slight discount to WTI. So strong oil prices go a long way towards supporting Alberta's economy, and our employment figures bear that out as well. See, unemployment sits now at just 5.8% in Alberta, down 2 percentage points from last year and remaining significantly below our long-term 6.5% average. But not everyone in Calgary is directly affected by global oil prices or regional employment rates. Each of us has to keep a roof over our head, has to put food on the table, and inflation has really taken its toll on economic markets all around the world. As you know, the Bank of Canada has sought to curb inflation by raising interest rates, and 2022 saw a dizzying 7 rate increases, taking the prime lending rate from 0.25% all the way up to 4.25%. 7 might just be a lucky number because inflation is finally starting to drop both in Calgary and throughout the country, and the Bank of Canada is unlikely to tinker with success, and the International Monetary Fund predicts that rates will remain at or above 4% for most of 2023 After 2022's steady climb, that's good news all in all, and it leaves an open scenario that everyone hopes will come to pass. A reduction of interest rates toward 3% by year's end, with a target closer to 2% in 2024. So we'll just have to wait and see how it turns out. What does this mean for all of you? If it strikes you as a bit funny that interest rates have skyrocketed while Calgary's economy remains largely healthy, you're not alone. Not that any of us is, complaining, but there's a downside to being the responsible one in the family. So you see, the most commonly cited measure of inflation in Canada, the Consumer Price Index, is heavily weighted toward housing. If you look at food, accounts for about 16% of the index's weight, and transportation 17%, but housing, shelter, and CPI speak is its biggest component at 30%. What that means is that nationwide housing trends have a huge influence on the CPI. Calgary is one of Canada's steadiest, most resilient real estate markets, but that doesn't count for as much as it should when housing prices in much larger cities, for example, like Toronto and Vancouver, find themselves overheating. And that's just what has happened over the last few years. And frankly, a ridiculous degree of speculation in Canada's largest real estate markets has really driven housing prices through the roof in our most densely populated areas. That's how a handful of cities can drive Canada's CPI to dangerous levels, and it's why nationwide efforts like interest rate increases hit strong local economies like Calgary's. We all have to take the medicine, and unfortunately, even those of us that aren't particularly ill. Now, that's the major downside these days of being a healthy and being a sane housing market while others lose their cool. Not that we're complaining. All told, we'll happily continue to be a beacon of stability, to be a beacon of economic vitality. The fact that interest rates appear to have topped out is fantastic news for Calgary's real estate market, and is just one of the reasons to expect a steady growth in the year to come. Our reputation is preceding us. In light of everything we just covered, it's natural for Calgary to feel like a younger sibling sometimes, but the world sees us in a much different, much better light. For the third time in 10 years now, The Economist has ranked Calgary as the very best place to live in North America. And this isn't just a comparison of housing markets. The study takes into consideration a huge range of indicators from culture, economic activity, to crime, healthcare availability, to education, to environmental factors. And as it turns out, we're not Canada's best kept secret or the world's any longer. And that's a good note on which to summarize this peep into 2023. So our outlook for 2023, with interest rates having crested, oil prices remaining firm, and Calgary's international reputation at an all-time high, things are looking up for the local real estate market. A historic lack of available housing hasn't quashed demand either, which sets us up nicely for 2023. Now, whether you're looking to buy or whether you're looking to sell, analysts predict that prices will remain strong. A study published in Global News predicts that 7% rise in housing prices throughout the greater Calgary market in this coming year. And RE/MAX 2023 housing market outlook gets even more specific, projecting an average increase in sale prices of almost $50,000. Now, if anything, I feel that those forecasts might be a bit low, if only due to Calgary's exposure to nationwide anti-inflation measures, and with the Bank of Canada finally making some hopeful statements about interest rates in the year to come, I'm less worried about those factors. Even though it's the start of a new year, some old observations hold true. Calgary's real estate market is the safest in Canada, and it continues to reward both sellers and buyers. It may have all the trappings of a seller's market, and if you're looking to move on or move up, you can plan to do so with confidence. But the factors supporting increased home valuation in Calgary throughout the coming year are too many and too well-grounded in solid economics to argue against getting into the market if the time is right for you to consider buying a home here. Demand will remain high, builders will remain busy, and the investment you make in early 2023 should deliver a reliable return well into the future. And as always, this report is a broad summary of my take, of my opinion of the market. It's not a precise analysis of your current situation, of the individual satellite markets, of the different property types or price points. And I hope that this report has given you some food for thought. Now, if you need some help with a specific real estate question or you just want to discuss your options, you can always head over to planwithmike.ca, or you can even call or text me directly at 403-809-9386, and I look forward to chat with you soon.